This is going to be the worst crypto winter ever. Summary. Bitcoin valuations are plummeting, and several analysts seem to be arguing that China's crackdown on cryptocurrencies is the primary explanation for the decline. However, the Chinese government has made numerous similar statements in the past, and it seems improbable that this latest knowledge is motivating investors to liquidate long BTC/USD positions. Other than that, fundamental questions of validity are being re-examined by the sector as a whole, and all of this means that we could be facing the worst crypto winter on record. We have made several bullish claims in previous posts, arguing for solid rallies in the BTC/USD currency pair. Indeed, we predicted a parabolic breakout in BTC/USD as far back as December 2020, when prices were still near 18K, so it does not appear as if we have always maintained an adamantly bearish trading stance that ignores the positive potential for cryptocurrency assets to modernize, safe, and decentralize financial transactions, in both consumer markets and in investment markets. However, the recent declines in BTC/USD appear to be particularly concerning, as they have gone well beyond the depths that many observers believed possible only a short time ago. Additionally, numerous news reports discussing the People's Bank of China's, PBOC, latest crypto crackdown indicate that Bitcoin assets may struggle to gain traction in the world's second-largest economy. For these reasons, we believe that the cryptocurrency community is still grappling with unresolved credibility issues and that an escalation of the market's selling pressure could result in losses in BTC/USD that exceed those experienced during the previous crypto winter that began in 2018. When attempting to determine an asset's true worth, it's critical to consider the importance of each of the prevailing narratives driving market sentiment. In this case, negative news that China intends to clamp down on Bitcoin mining and trading sparked a global cryptocurrency sell-off and prompted an initial test of the $30,000 level in BTC/USD. However, the recent news out of China largely echoes the prohibitive tone used in previous instances of cryptocurrency asset restriction, which makes it difficult to see how investors might view this information as novel or unexpected. To be sure, the prospect of adding nearly 1.4 billion Chinese users to the Bitcoin ecosystem will undoubtedly have a bullish effect on BTC/USD market valuations. However, the prospect of Bitcoin, and other cryptocurrencies, being banned on the Chinese mainland is not recent, and it makes little sense that we will see a more than 50% decline in BTC/USD in less than 6 weeks solely on the basis of this knowledge. For these reasons, we conclude that there are underlying problems at play and that the problem of cryptocurrency credibility continues to vex several traditional investors. Of course, it should be kept in mind that perma-bulls still exist. Also well-known fund managers such as Cathy would continue to advocate for Bitcoin to hit $500,000, stating that volatile asset groups are currently being punished the most due to inflation fears, and that we go through soul-searching periods during these times and scrape the templates, and yes, our conviction is just as powerful. Are you convinced? What is inflation? Could any of these investment justifications be sufficient to spur contrarian buying interest in Bitcoin assets? At best, these suggestions seem to be speculative, and the market does not appear to be reacting to these bullish views with significant buying activity, even at these lower prices. If we asked each bullish Bitcoin investor why they bought BTC USD in the first place, how many will check the inflation box on the questionnaire? It is improbable that a sizable number of global investors initially purchased Bitcoin assets in order to provide a hedge against inflation. If that is the case, it appears far more likely that those investors will gravitate towards precious metals assets, which have a longer track record of inflation security, such as gold or silver assets. It should be noted, however, that gold and silver prices traded in the bearish direction for the majority of the recent rally in BTC USD, which largely occurred from December 2020 to April 2021. However, now that this rallying phase is clearly reversing on the long-term charts, it's time for cryptocurrency investors to evaluate the possible harm that might occur if this latest selling pressure persists. According to our study, bulls will need to maintain control of BTC USD near the $30,000 stage. This seems improbable at the moment, given the formation of a head and shoulders pattern on the BTC USD daily charts and the price trend indicating a series of lower highs since mid-April. Along with the significant selling activity that has developed on the BTC side of the equation over the last 6 weeks, we believe that the US dollar's near-term bullish prospects could exert additional pressure on the BTC USD currency pair. More precisely, it now appears as if increasing inflation can potentially function in the opposite direction, reviving purchasing activity in the US dollar, based on the possibility that the US Federal Reserve will be forced to start raising interest rates before many other nations around the world. Finally, we believe that the bullish near-term outlook for the US dollar can prevent BTC USD from establishing the rally required to reverse the current outlook. Regrettably, this means that further declines below the $30,000 level in BTC USD could cause additional stop-loss orders, accelerating the market's current downward momentum. Given the absence of buying activity near the $30,000 level, the most likely scenario now appears to be a dramatic drop through this price zone before the end of the month. However, if we take a contrarian view of these markets, a break of resistance at the $43,000 level, which corresponds to the May 20th BTC USD price high, could alter our outlook as a bullish signal signaling improved prospects for another run at April's all-time highs. In general, it seems as if the consumer is missing a compelling reason to purchase cryptocurrency assets, even at these recent lows. Interestingly, these conflicts seem to be personified within the Doge father himself, as Elon Musk has sent conflicting messages about his shifting opinions on Bitcoin and other cryptocurrencies. Without strong signals of trust from the movers and shakers, the fact is that BTC USD is missing another trigger that could help crypto investors escape what could become the worst crypto winter on record. Given the record highs reached in BTC USD over the last few months, crypto investors must also recognize that the chances for a major correction have increased proportionately. Ultimately, this may mean that Bitcoin's prior bear market from 2017 to 2018 seems trivial in comparison to what we could soon face, and that market rates in BTC USD are poised to plumb the depths of Wall Street's current expectations in a relatively short period of time. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.